Hey guys, welcome to the daily analysis for Friday, December 21st. And since it is a Friday, we're going to be covering the weekly charts as we typically do on a Friday. And obviously, with a lot of the pretty intense reversal stuff that happened in the market today, there's definitely a lot to see and a lot that shaped up the weekly charts. You can see right now the pound dollar weekly looks very, very different than it did just a few days ago. So that is how it appears on a lot of charts with a lot of major shakeups on the weekly chart. And I definitely want to cover all of those and talk about some of the potential future outcome we could see of that, which is what we'll get into in the analysis today. Alright, before we jump into that, let's just go over our terms real quickly and then we'll get back into the charts. And the terms basically just let you know that the daily analysis is for educational purposes only. We're not registered or licensed by any broker or security authority or anything like that. So we're not telling you what to do with your money. We're just giving you some personal views on what the market is doing, okay? And so it is important to understand that because the United States government is very strict about their rules and regulations as far as giving investment advice. We just want to be clear that that's not what we're doing here. We're not telling you how to risk your money. Okay, so if you understand those, then we can move forward and get into the charts. Now the first pair I want to cover is the pound. This is the weekly chart again of the pound dollar. And obviously the main thing to note is this major reversal sign here in the market that happened mainly from yesterday and today. And you can see that it's kind of in a double resistance zone, number one with these tops here, and then number two with this long-term trend line. Now the trend line that I have drawn here is up for debate. I mean, everyone draws trend lines differently, so perhaps your pound dollar long-term trend line is a little bit higher. The first way that I had drawn it was a little higher, and I did kind of adjust it to make it fit this point. But nonetheless, there's definitely a major resistance point here, and this is pointing down with a very strong reversal sign based on this weekly pin bar. Now, as far as targets you could expect, there is an upward move here, and so we have this trend line which is in play. We also have this point here, which is a decent level to keep an eye on if you're expecting price to continue downward. And then if there's enough momentum and it breaks through that, then the main, the biggest level here is like 153. So definitely a few different levels to keep in mind. If the momentum really continues and we're able to break through some of the smaller zones here, there is nothing saying that price can't come all the way back down to this bottom range around 153, which would be obviously a very, very large move. So I'm not necessarily suggesting that's what to expect, but obviously this was a serious reversal, showing a lot of U.S. dollar strength. And with fiscal cliff stuff and tax hikes and all of that, if the stock market follows suit and crashes because of all those regulations and those negative things happening, the dollar is very likely to get stronger. That's what happened in 2008 when the stock market crashed. The dollar really rallied, and obviously the pound dollar crashed. So another pound dollar crash here would not be too surprising if the U.S. Economy really struggles. And so with that in mind, anytime you see a symbol like this, it's a little difficult not to think, oh man, I better short for all it's worth and try to catch the crash down. Obviously, this is trading and these are charts and things don't always work out that way, even when it seems somewhat obvious, but it's definitely something to keep in mind, especially when you go back and look at 2008 and watch the way the pound fell against the dollar. It was a pretty phenomenal collapse, really. So with that in mind, keep an eye on this tail bar, watch these zones, and see what happens here. If you're already short, like we are, then it becomes about whether you need to take profit now, as while it reversed this low, or if you actually want to hold on to it, be patient, and see if you can allow this to develop into a really large winning trade, which I think is possible. But again, that's going to take some trade management skill and a lot of patience. And so that's what we have going with the pound dollar, and it's pretty obvious signal. Now let's actually go back and look at the euro dollar too. So with the euro dollar, it is a little bit different. Where we have that long-term trend line that the pound dollar is under, the euro was a little bit steeper trend line and obviously broke out of that recently with some pretty good euro strength. Now, since that breakout, we've kind of found ourselves in this range that price has been in between here. The range is about 126.80, as you can see here, all the way up to 131.60. So it's a pretty wide range, and price has been in that level for a while. And if you look back, you can see that before the breakdown, price was a little bit higher than that range, but in its own range for a consistent amount of time as well. So what happened here is we broke lower, then we actually broke right back up, and we're settling in a little bit lower range than where price was before. And so, of course, the question you have to ask yourself is this going to push us back down, or are we going to stay right in this range that we've been in for a while now? Or are we actually going to break back up and maybe talk about being in these higher prices up near 135, which is where price was before this breakdown? So that's really the main topic of discussion. And before this major reversal in the market, especially when you consider how bullish this weekly bar was, it seemed that price was definitely on its way toward breaking up into higher prices, maybe attempting to get to 135 or higher. But obviously now we do have this reversal sign. It's at a pretty good level, but it's kind of above the level for the most part. Rather than the tail kind of just touching the level and bouncing lower, it's actually, the tail is almost the entire way above it, and the head of the candle is just barely back into the resistance zone. So because of that, it makes it a little more tricky to kind of expect price to bounce lower because it's still kind of sitting on this level. Now it's acting as more of support than resistance because price already broke through. So a little bit tricky situation there on the euro compared to the pound. But nonetheless, this tail bar does speak volumes about the reversal in the market, and it'll be very interesting to see if that bearish momentum that took over was really just a fake, or if that's able to continue throughout the end of December, and then of course when the markets really get active again in the beginning of January and through the middle and end of January, and that first month, and what statement that makes. So that's going to be very interesting. I'm very eager to watch that and see what's happening. I would say the pound dollar looks a little better as far as the overall reversal potential, but certainly the euro has a similar capability of crashing if this bearish momentum were to hold up for that euro and pound and the dollar continue to gain some strength. Okay, so that's the euro dollar. Let's actually take a look at a few more dollar crosses. I want to look at the US dollar, Canadian, and the odd dollar as well, just because of this dollar move. I think it's important to check all of our pairs. I just realized that before I switch over that the euro dollar is saying daily. My label says daily, but this is the weekly chart. Sorry for that confusion. It's the weekly chart that we're looking at here, not the daily. So my apologies. I forgot to fix my label there. Hope that wasn't too much of an issue for you. The next pair I want to cover is the odd, as I mentioned, and obviously the main thing to notice about the odd is the massive bearish weekly bar that we have in place. A huge momentum bar, comparative to the recent bars, and looking like it's definitely breaking toward lower prices. So what's important to keep in mind here is that this long-term downtrend is really still intact because of just the small peak above the level. So where this might have looked like a breakout, I would say that this is still intact, and this is overall moving down with a great bar here. Now it is sitting right near support still, but definitely a lot of momentum in that weekly bar, and I think has a good chance to continue downward. So we'll see if if it has any ability to follow through. And again, that's really going to depend on if this U.S. dollar can continue that strength. Now, when you zoom back and look at the U.S. or excuse me, the odd U.S., you can see that in recent history, it's been a pretty flagrant uptrend. But since this peak up here at about 1.1, it has started gradually moving down. And so historically, when it started gradually moving down, like for instance in this example, it then bursted back up. But this is a little bit longer term, so it'll be interesting to see how long it can keep this move to the downside up, because traditionally, again, the odd has moved up quite a bit on a pretty consistent basis. So this is a very long-term upward trend that we're in, and it'll be very interesting again just to see when this runs out and when we get that next bullish break to the upside, because you have to anticipate that that is going to happen. The odd has such a much higher interest rate than the U.S. dollar, and there's a lot of fundamental things that give the odd some ability to remain a stronger currency, at least in the past 5 years or so. So we'll see again if that can continue, but right now it's looking like it's respecting this level and really bouncing to the downside with a lot of pressure and a lot of momentum. I also wanted to show you the US dollar CAD real quickly. It's more of a sideways market. I don't think as many trend lines and things in play to pay attention to, but I just wanted to note that when you look at the USD CAD since the beginning of 2011, it's been relatively sideways, and right now we're on a leg that's pushing up, had a small pullback, and is now looking to continue. So with this kind of sideways market in play, there's probably some pretty good potential for this to continue up toward higher prices, and so the USD CAD will be another one to watch again for the fourth time. Whether or not US dollar can continue to be strong is going to be the main factor there, and so we will obviously find that out as price action continues and time continues. Now the euro pound finally apparently does not have the US dollar involved. Is still struggling to break through this level. This is a level that we've looked at for a long time, and so we're still struggling. Last week's bar was a great bullish bar right off this trend line area, and really moving with a lot of momentum. So this week we stalled out a little bit, but we're right at that level, so it'll be interesting to see if we can break through and head up, because again, this is starting to be pretty consistent move to the upside, obviously breaking the downward trend line and perhaps getting up towards some of these higher prices, 85, 86, 87 maybe. We'll see if it can continue upward. The euro pound, obviously, again, one of those pairs that tends to be relatively consistent once it starts making a move, so we'll see if that consistency can continue. Now the pound New Zealand also bouncing off a trend line here. This is the trend line we talked about last week. That price was coming right into that trend line. If any of you took it long because of this trend line, it bounced about 500 pips to the upside from that trend line, so a great move. And now we're starting to get into this major consolidation or resistance area. It'll be quite a struggle, in my opinion, for the pound to break through here. But if the AUD in New Zealand continue to be so weak, it won't take much. It won't take much strength to break through. So that'll be one again that's worth waiting on if you're looking to take the pound New Zealand long, because you never know how long these things can move. Obviously, if it comes all the way up to here, we're talking about well over 1,000 pips, which is a great move, and obviously, in my opinion, definitely worth waiting for. So that's the pound New Zealand, a great bounce off the weekly trend now. Just a matter of whether or not that can continue. Okay, and lastly, I just want to finish up by talking about this euro yen. We talked about the massive momentum upward on the euro yen, covering 1,800 pips with some serious bullish intensity. But obviously, with the euro retreating today, it really pulled back quite a bit, and now we're sitting right near the same resistance level that has been hit many times before, and obviously, it's acting as resistance once again. So it looks like there's definitely a chance for this to make a pullback and head to the downside. Obviously, there's always a potential for that to be a fake and it to continue and break higher, but right now it's looking pretty bearish based on this level and the major resistance that we're in now. So certainly keep that one in mind as well. Alright guys, and that's the analysis for today. I hope you enjoyed taking a look at these weekly charts, and feel free to leave any comments or thoughts below. Have a great weekend, and I will see you Monday for the analysis. But if you're gone and enjoying Christmas, have a great Christmas, and I'll talk to you after that.